Hey guys, welcome back to the channel. I hope everyone is doing well. So apologies for the previous video with regarding Fidelity ETFs. Unfortunately, when you're away, you kind of have to just like make do with whatever equipment that you have at the time. So I'm gonna try to re-upload this. I'll leave like the first one, but just putting like a warning label on it, just because in case like some people they ask some questions on the comment section. I can leave that like the answers up, and then also I guess just for this one, I don't expect this one to get that the same amount of views, but this is, I guess, maybe in the future if you're a new person watching this. I guess like the sound quality should be better for this one. So Fidelity recently entered the high yield wars, and I just want to kind of share like the three ETFs that they released so far as of this recording. So they have something called FBUF, FHEQ, FHEQ, I guess, and then FYEE. So some of the like the marketing names sound kind of funky, but they're pretty simple if you break them down. So the first one, the Fidelity Dynamic Buffered Equity. This is basically just a defensive options collar. So basically what a collar is, you have like some stock, then you sell a covered call, and then you buy a married put. And except this time they're using the XSP rather than doing individual covered calls on each of the individual stocks. This is, I guess, for them it makes sense just because there's probably some tax efficiency doing it this way. And then the price is right. I feel like at 48 basis points, I think this is priced fairly. Although, if you notice, like the regular, I guess like the regular retail price is 52 basis point. But so far they have a fee waiver and either a expense reimbursement of 4 basis points. So that brings the total down from 52 to 48 basis points. So I guess like hopefully they'll keep this going forward. So again, they want to try to invest at least 80% of the assets in equities. And then, there's a lot of like fancy talk of computer aided quantitative analysis of historical valuation, growth, profitability, and other factors. And let's take a look here, down here for, okay, so they leave it open-ended for domestic and foreign issues. So I take that to mean ADRs. So let's see. And they also want to leave the option open to lend securities to earn income for the fund as well. So the managers, so you have like 5 managers here, and I'll cover this a little bit more in for the other funds. And then you have like the Fidelity Hedge equity. So this one, again, they're using the XSP index, just because I think it's because it's smaller. They may use the SPX in the future, I guess, if the fund grows in size. But for now, this particular fund, they're using married puts. So basically, you want to think of a married put as you have a stock, and then you want to buy a put option for protection. So consequently, there will be a drag on this particular fund. You'll have like less downside risk, but obviously you have to pay for the insurance of the put. And then this guy is pretty similar in terms of like fee structure. Originally, it's supposed to be 52 basis points. So then right now, I guess it's kind of like a sale where you're saving 4 basis points per year. So again, hopefully they can keep this at 48 basis points going forward. And then this, it's a similar verbiage. You want to invest at least 80% of the assets in equity securities, and then also like domestic and foreign issuers, and then they want to lend securities to earn income for the fund. And then again, like its usual legalese too, like you want to employ a disciplined options based strategy. So of course, like we'll have to keep an eye on like the holdings. So this particular fund, there's one less manager, which is kind of interesting. And then the FYEE, the Fidelity Yield Enhanced Equity. So this is just like a regular cover call, except I like how they ladder it. So basically, like they have covered calls using the SXP again, but this time they spread it out over different expiration cycles. So this is pretty interesting, at least in my eye. again, they have kind of like an on sale structure. This one is the most attractive in terms of like cost structure. This is 32 basis points originally, but then they knock it down another 4 basis points again. So if they can really keep this at 28 basis points going forward, I mean that would be great. That would help them gain market shares from some of the other ETF fund families. And then again, they kind of use like the same, I guess, like the verbiage, computer aided quantitative analysis, etc. And then this time they also brought back like like the five managers. So I'm kind of hoping they're not gonna stop at just these three. I mean, there's plenty of more things I feel like they could do. So right now, like they're not terrible, but they're not terribly exciting either. And I'm kind of wondering to myself, like these are just like the pawns, and then like they'll see how these go. Maybe in another few months, they might come out with some more. And right now, with Fidelity, they're definitely the price is right, but this is, right now they don't like the way they structure the website. It's kind of it's a little tricky to like get all the holdings. Like I would have loved to like do some more analysis on this, but right now, they don't have like a downloadable spreadsheet. They just have PDFs, which you can get a converter from PDF to Excel, but then it's just like another hassle. But for now, I guess I'll keep an eye on this. This is something that could be interesting for me in the future, and hopefully this is of interest to some of you as well. If you like this type of content, please consider giving this a like. If you can subscribe as well, that would be greatly appreciated. If you can throw a super thanks here and there, that will also be fantastic. Just want to prolong the channel. If you can help me beat the algorithm as well, that'd be you know greatly appreciated. So thank you for watching. Thank you for being patient, and I'll see you in the next video. Bye now.